2023 is going to be a year of a severe recession. A lot of people and businesses are going to struggle through it. But before we even talk about how to navigate through the current recession, let's talk about how we got here in the first place. Why do recessions happen? If we understand the causes for a recession, maybe we'll be better at navigating through it. Let's get started.
Hey Tom, it's the one and only Floyd Money Mayweather. First I want to say congratulations on your YouTube channel. Everybody needs to follow your YouTube channel. So what everyone needs to do is subscribe to Tom Pang. Great guy, great person. Tom, keep up the great work.
So, in the 1600s, Netherlands is a superpower. And like many Europeans at the time, they want to go out around the world and conquer as much land as possible and bring back the wealth and the money back to the Netherlands. But the Dutch people are Calvinists. Calvinists are conservative Christians, and they're not allowed to show off their wealth. So they cannot buy fancy house, fancy car, they cannot dress fancy to show off their wealth and status because that's against the religious rule. So what do you do when you have a lot of money, a lot of wealth, and you want to show off, but your religion doesn't allow you to? Well, they found this new flower through their conquest of the world. This flower is called the tulips flower, and it's a beautiful flower. So the Dutch people start putting this flower in their hat, in their dress, to show off their wealth and status. And more people started to do it in the Netherlands, and the price of these tulip flowers start to go up. And the thing about tulip flowers is that it doesn't last forever. It will only last one season and then it'll die. And then next year you have to buy new tulip flowers. And as everybody is fighting to buy these flowers and the price is going up, some banker, some financial guy in Netherlands created this new financial instrument. It's called futures. A future is basically a contract to buy something at a certain price on a future date. So in the Netherlands, now they can buy and sell these contracts. So they're no longer selling the actual tulips, they're just selling these contracts. So this financial instrument called futures actually still exists today. I can buy futures in oil, in gold, in silver, in most commodities, and that means I promise to buy oil at a certain price on a future date. And the people in the Netherlands, they start trading these futures. So for example, I buy this future and then I sell this future when the price of tulips goes up. And I make money without actually owning any of the tulips. And the price of the tulips and these futures start to go up and up and up. Eventually, a price of one tulip can equal up to the price of a house. And that is completely crazy. Eventually, people started to think this is crazy because a tulip flower cannot be worth one house. You cannot eat a tulip flower. A tulip flower cannot keep you warm. Basically, the tulip flower is worthless. And some people realize that, and they start selling these contracts. They start getting rid of these tulips. And more people are starting to get rid of these contracts and getting rid of these tulips, and it cost the price of the tulips to crash in 1637. And eventually, one tulip is worth nothing. And when this happened, a lot of people lost their money, a lot of people lost their houses, and the economy was basically in the shithole. And it did not destroy Netherlands, but today, Netherlands is not a superpower. It probably has something to do with that tulips bubble recession. So how did this recession happen? Is it because they're Calvinists, they have no way to show off their wealth, so they have to buy tulips? Or is it because they created this new financial instrument called futures? Or is it because the Dutch people got greedy and they want to make money with basically flowers? Well, let's talk more about that. But let's get to our second recession. So let's look at the next big recession. It is the 1929 Great Depression. Note, it's called a depression because it's actually worse than a recession. The 1929 Great Depression lasted 10 years, and in the United States, 25% of the people don't have jobs. Half of the banks went bankrupt. It was probably the most serious economic decline in world's history. So how did that happen? For that, we need to look at the 1920s. So in the 1920s, a lot of the Americans, they were fighting in World War I. They returned to America because the war ended. And when they come back to the United States, they need shelter, they need food, they need products and services. And a lot of business people set up factories to produce these products and offer services to the returning Americans. And that means the demand for wood, for rubber, for industrial materials went up. There was also a lot of innovation. For example, Henry Ford, founder of the Ford Motor Company, he revolutionized manufacturing with the assembly line. Now, the Americans can make cars faster and cheaper, and every family can afford a car. So consumerism in the United States went up as well. Everybody want to buy a house, a car, a radio, anything they could get their hands on. They want to buy it, they want to enjoy it. And to accommodate this growing economy, the United States government was printing money as well. They're pumping a lot of money into the economy. And it was very easy to borrow money from the banks. If you want to start a business, you can go to the bank and they will give you a loan. So everything was great. 1920 was a really good time for businesses and consumers, basically for everybody. And there's nothing wrong with that. That just means that the economy is very healthy. And when people are wealthy, what do they do with their money? Well, they want to put their money to work. So they start investing in the stock market. More and more people start putting their money into the stock market. And the stock prices keep on going up and up and up and up. And it seems like stock prices cannot go down. And that causes even more people want to invest in the stock market. And when the banks saw that a lot of people want to invest in the stock market, they want to make it easier for people to invest in the stock market. So if you want to invest in the stock market, you go to the bank and you say, I want to borrow some money to invest in the stock market. The bank will say, yes, here is your money. In fact, you only need 10% collateral to borrow 90% of your investment. So what that means is that if I have $10,000, I can go to the bank and get $90,000. And with $100,000, I can invest all of that into the stock market. So that created a huge bubble. The stock prices are crazy. It does not reflect the actual value of the companies that issue these stocks. And eventually somebody realized that, and they realized, hey, these stock prices are so unrealistic, it's time to sell. And one person starts selling, and then more people start selling, and then eventually everybody started selling. So on October 29th, 1929, the stock market in the United States crashed. So in one day, the stock market lost $14 billion in value, and in today's money, it's about $240 billion. And that was only the beginning. You see, there was so much money in the economy, and the government wanted to control inflation. So the government started to raise interest rates. And remember all those people that were borrowing money to set up business? Remember all those people that were borrowing money to buy stocks? Well, now the interest rate is going up, and now they cannot pay back to the bank. And a lot of people went bankrupt, and the banks cannot get the money back. So the banks went bankrupt. And all these people losing all their money, they cannot buy any more consumer goods. So all these factories, they have a lot of inventory in the factory that they cannot sell. So they have to let a lot of employees go. So unemployment went up. Many factories closed down. And it took 10 years for the economy to recover again with World War II. So what happened in the 1929 recession? How did it happen? Well, there was a lot of money in the economy. Everybody had money to invest in something, which is the stock market. And the stock market was overvalued. Eventually, it crashed. So whose mistake was it? Is it the banks because it was too easy to borrow money? Is it the government because it was printing a lot of money? Or is it the people because they believe the stock market will never crash and they want to make money by actually investing in something that's not real? You tell me. Now let's look at the next really serious recession. Late in 1990s, everybody discovered something new. It's called the internet. And it's the next biggest thing that's gonna happen to the world, the internet. A lot of internet companies were created. A lot of investors put money into internet companies. This is the time when all the important internet companies were created, like Facebook, like Instagram, like Twitter, like many others. And it was very easy to get money. If you had an idea, you don't even need a product. If you just have an idea, the investor will throw money at you. I missed it, okay? Back in 2001, I wasn't thinking about getting money from investors. So I missed that really big, giant dot-com boom. But with the big boom also comes with the crash, because it was so easy to get money. There were thousands of fucking useless internet companies that produces absolutely nothing, and eventually people realized, hey, you know what? We're giving money to all these internet companies that actually do nothing. And then there was a big collapse of all these internet companies. Only the strong will survive, all the weak ones all died. Fortunately, for the 2001 dot-com bubble recession, it really only affected the tech industry, not so much the rest of the economy. But it was still a very severe event. So what happened there? Investors got greedy. They were investing into companies that basically do not provide any value. They were investing in companies that only had an idea without actual real business model. They were not even profitable, and they were investing in these type of companies. Eventually that bubble had to burst. So let's talk about the next serious recession, which is the 2008 financial crisis. If you are old enough, you would remember this. I believe this somehow affected Vietnam as well. So after the dot-com bubble bursted, there were still people with a lot of money. They know not to invest into dot-com stocks anymore. They had all this money, but they need to invest it somewhere. So where do they invest? Well, real estate. Real estate seems like a good bet. Plus, the interest rate was low. So a lot of people were buying up real estates. And traditionally, when you buy a house, when you buy real estate properties, the bank will loan you money only if you have good credit. They will not lend you the money unless you can provide evidence to show that you will pay back the money. Many financial institutions start to see mortgages as a good investment. And what they do is they pool a lot of mortgages into a package, maybe 1,000 mortgages into one package, and that package is called a mortgage-backed security. And they can buy and sell the security. The financial institutions, they were trading these mortgage-backed securities, but they needed more people to buy houses. They need more people to borrow money to buy these houses. But in order to create even more mortgage-backed securities, they need to encourage more people to borrow money to buy houses. There was just not enough people to borrow money to buy houses. So what happened was the banks started to reduce the requirement to buy a house. So now anybody can walk into a bank and get a loan to buy a house. You don't even need to prove anything. And even worse, the banks were offering these really sweet deals. They're called subprime mortgages, meaning that when you use subprime mortgage to buy a house, the first few years you only have to pay very low interest. And after a few years, the interest rate is raised to a very high level. But most buyers, they don't read the fine print. So they don't know that after a few years they have to pay this huge interest rate. So because of the low interest rate through subprime mortgage, and because the banks are reducing the requirement to buy a house, it was very easy to buy a house, and more people start to buy houses, so the housing prices went up. And it's a vicious cycle. So after a few years, the high interest kicked in for most of the house buyers. Now they cannot afford the houses because of the high interest rate, and they start going to default, meaning they cannot pay for the house. They have to return the house to the bank. And more people started to do that. They start to default because they cannot afford the house. And also at the same time, the interest rate was going up as well. And because of that, more and more people cannot afford their houses. So they start giving it back to the bank. Now the bank has a lot of houses because of all these defaults, but they don't know what to do with these houses. And when they sell these houses, they're not worth much because at this time, the housing prices have already crashed. And when the banks cannot get the money loaned out, they also go bankrupt. So in the 2008 financial crisis, we saw some of the major banks in the United States, they went bankrupt, like Lehman Brothers, like Bear Stearns, like Merrill Lynch. Basically, they either went bankrupt or they got bought out. So the 2008 financial crisis is almost a repeat of the 1929 Great Depression. All the same factors were there. Basically have a housing bubble, and housing price was going up. The housing price does not really reflect the actual price of a house. Eventually that bubble has to burst. And also because money was so accessible, anybody could borrow money to buy a house. And eventually when people cannot pay for that house, the economy goes into the shithole. Now let's talk about the current economic recession, the 2023 recession. Present day, 2023, we are going to go through a major recession. This is probably going to be a very serious one. And when we look at the past recessions, what can we learn from those? Well, in the last few years, we saw a huge increase in Bitcoin value. Why did that happen? There were people with a lot of money, they don't know where to invest that, so they put the money in Bitcoin. And we saw Bitcoin value go up and up and up. And just like the tulip flowers, it's not a real thing. Eventually, it has to come down. We saw a huge jump in the stock market in the last couple of years. Again, it is because most people don't know where to put their money and they see stock market being the only viable option. After the 2008 financial crisis, the government has established a lot of financial rules, so it is difficult to repeat the same mistakes in 2008. You cannot have a real estate bubble anymore, but people put the money in Bitcoin in the stock market and create bubbles in those spaces. And also because of COVID, a lot of governments, including the United States government, was printing a lot of money. In fact, 25% of all US dollars was created in 2022. Because all of this money being created, a lot of people have money and they don't know where to invest, so you see a huge increase in stock market value and also Bitcoin. And on top of that, there's a war in Russia, Ukraine, meaning that energy prices is going up, which will also help push up inflation. And there's a supply chain problem due to COVID. A lot of factories were shut down, a lot of logistics companies were shut down, and when the COVID restrictions lifted, it takes them time to get back into operation. So all these factors contribute to the 2023 recession. But ultimately, it is because of people's greed. Because there's a lot of money in the economy, they don't know where to invest. They end up investing in something that is not real, like tulip flowers, like Bitcoin, like the stock market. They inflate the value of something to a dramatic level. Eventually, it needs to be corrected. And when that correction happens, we have a recession. And in 2023, there's a lot of correction that needs to happen. So the 2023 recession will be a very serious one. I'll be releasing a video and we'll talk about how we're going to navigate the 2023 recession, what you can do to ensure that your financial health is not affected by this recession. Whether you are a business owner, whether you work for a company, we're going to talk about how you're going to survive or maybe even thrive in the 2023 economic recession. So take some fucking action. Don't be so greedy. It's greed that's causing all these recessions. and don't be a fucktard.